Hello, hello students. So today we are going to study about the topic working capital management, dealing mainly with the operating cycle. In our previous lecture, we have already studied what do you mean by working capital, what are the classifications under working capital, and what are the factors influencing the working capital policy of the firm. So let us now in detail study about the operating cycle. So we should know that operating cycle of a firm should be defined as the period from the procurement of raw materials to the realization of sale proceeds. Means this cycle starts or commences from the initial step, which is procurement of the raw materials. Procurement of the raw materials means getting the raw materials from the suppliers, then putting it into the conversion processes. Conversion process means the manufacturing or the production process to produce the finished goods. Then that finished good is being sold in the market, which generates sales. Means realization of sales proceeds is the last step to complete the operating cycle of a firm. So in other words, we can say that it also consists of inventory conversion period and receivable conversion period. Means the firm's task is not only completed after just producing the finished goods, but it successfully completes when it is converted into sales. The finished stock is converted into sales. If the firm is receiving the credit from the supplier of raw material, then deferral period is deducted to find out the net operating cycle. So what we are going to do is we are going to find out the net operating cycle, and out of which we have to deduct deferral period. Deferral period means the credit basis period which has been taken up by the supplier. So how we have to practically calculate NOC? This is ICP, means inventory conversion period, plus receivable conversion period minus deferral period. Or in other words, in the simpler terms, I have broken down this formula as RMCP, which is raw material conversion period, plus work in progress conversion period, plus finished goods conversion period, plus RCP, means receivable or debtors conversion period, and minus PCP, which is payable conversion period. So in this way you can easily find out net operating cycle. Now let us take one illustration to practically know how to calculate the net operating cycle. Following information is collected from the record of Sundar Manufacturing Limited for the year 2007. Cost of goods sold, cost of production and raw material consumed is given. Apart from this, averaged finished goods, average work in progress, average raw material, debtors collection period, creditors payment period is given to you. So what you are required to find out? Operating cycle. How many operating cycles does the firm have in a year? So they have assumed that 360 days in a year needs to be considered. If it is not given, then you have to take by default 365 days in a year. So starting from RMCP, WIPCP and FGCP. So first three formulas is the combination of inventory conversion period. First see the formula of raw material, which is average raw material divided by raw material consumed into 360 days. So average raw material means you have to put the value of the raw material divided by raw material consumed. Raw material consumed is given as 6 lakh and basic raw material is given as 50,000. So you have to put the value, and the answer which you will get 30 days for the raw material conversion period is this indicates that RMCP is 30 days. Similarly, for the second point, work in progress, average work in progress divided by cost of production into 360. So what is cost of production given? 5 lakh and work in process 30,000. So by default it is written average. You do not have to calculate the opening and closing. Only when you have to calculate the opening work in progress plus closing work in progress divided by 2, when it is clearly given in terms of opening and closing. Else you have to directly pick up the value of the work in progress. So for finished goods, it is average finished stock divided by cost of goods sold into 360. So remember that in the denominator for work in progress, it is cost of production. On the other hand, for the finished goods, the denominator is cost of goods sold, right? So you have to calculate the conversion periods of finished goods, work in progress and raw material in terms of number of days, right? Now what is left? Debtors collection period, or you can say debtors collection period, or we also known as it is receivable conversion period, which is 45 days, which is directly written. So let us see in the question whether it is written directly. Yes, it is given. If not, then you would have to put the formula. Now next, minus creditors payment period 30 days, which is also given in the question. So what we have to do, net operating cycle is a sum of RMCP plus WIPCP plus FGCP plus debtors conversion period minus creditors payment period. So you get answer NOC as 85 days. Now they are also asking you to calculate the number of cycles in 1 year. So the formula to calculate number of operating cycle is equal to net operating cycle divided by number of days in a year. So number of days in a year divided by NOC. So 360 divided by 85, which is 4.2. If they would not have been given 360, so what we have assumed, 365 divided by 85. So 4.2 cycles of 85 days each in 1 year. Now let us take one more question to get the better understanding of the calculation of the operating cycle. XYZ Limited has obtained the following data concerning the average working capital cycle for other companies in the same industry. Raw material stock turnover, credit received, work in progress turnover, finished goods stock turnover, debtors collection period. So this is all given in number of days. So consolidatedly it is 95 days operating cycle. Using the following data, calculate the current working capital cycle for XYZ Limited and briefly comment on it. So what you have been given, the industry standard, and you have to compare it with your present standard. Sales, cost of production, purchases, average raw material, average work in progress, average finished goods, average creditors and average debtors. So let us take it one by one, starting from raw material. So formula of the raw material conversion period is average raw material divided by average, or you can say total raw material consumed into 365. So what is raw material given to you? 190 divided by raw material consumed is 1200, right? So into 365. Raw material consumed with the direct name, it is not given, so you can take the purchases. Second, work in progress, average work in progress divided by cost of production. Average work in progress is 170 divided by cost of production is 4200 into 365. Third, finished goods, average finished stock divided by cost of production into 365. Why I have taken cost of production again for the finished goods? Because they have not given cost of goods sold. So if in case, please remember that if in case cost of goods sold is not given for the calculation of the finished stock, so you can take cost of production in that case, right? So average stock divided by cost of production into 365. So 360 divided by 4200 into 365. Next, for debtors conversion period, it will be average debtors or average receivables divided by total credit sales. This all information is also given to you. 700 divided by 6000. Credit sales if not given particularly, so you can take total sales, but they have given all credit sales as 6000, right, into 365. Next is creditors. Average creditors divided by total purchases. So 150 divided by 1200 into 365, which is 46 days. So what you have to do now, calculate net operating cycle by adding raw material plus work in progress plus finished goods plus debtors but minus creditors. So you have got 101 days as the net operating cycle of this firm. Now you have to compare with the industry standards. How you have to do the comparison? See on the comment side. For XYZ Limited, the working capital cycle is below the industry average, including a lower investment in net current assets. However, the following points should be noted down about the individual elements of the working capital. Now what you have to take, pick up the creditors and compare, pick up the debtors and compare, pick up the raw material and then compare. In this way you have to create the points. See the first comment. The stock of raw material is considerably higher than the average. Average means the industry standard. So there is a need for more stock control procedures to be reviewed. Second, they have compared the creditors position. So the value of the creditors is also above the average. You can clearly see that industry standard says credit received 40 days. What you have calculated is 46 days, right? So the value of the creditors is above the average, which indicates what? That the firm is delaying the payment of the creditors. So the payables, they are not in a good position. The credit period, the credit worthiness does not show the good sign. So what can be the implication for the firm? The implication can be the higher cost of raw material, or they might lose the goodwill of the suppliers because they are not able to maintain the credit worthiness. So what more we can compare? The finished stock, which is also below average. Industry standard says finished goods 40 days. What you have calculated 31 days. There is a good gap between the conversion period. So what does it indicate? That it indicates it may be due to high demand for the firm's goods or to the efficient stock control. Low finished goods stock can, however, reduce sales since it can cause delivery delays. And last, debts are collected more quickly than average. The company might have employed goods credit control procedures or offer cash discounts for early processes. So this is all for the concept of operating cycle.